And we are live. My good gentlemen, welcome back to Macro Monday. We're going to dive into, as many markets as we can. I'm going to show a little charts today and try to, well, I guess we've been doing this every week, but I'm going to try to always tie this back into like crypto and yield farming and my thoughts on how this whole world view looks at this, or all this data that we're looking at, how it pertains to that, because I know that's what you guys are here for. So, how you guys doing today, man?
Pretty fantastic. Wait, pretty fantastic. There we go. I was quiet on the spaces. Um, but yeah, man, pretty fantastic. Nothing has changed much, but things always change. So, either it's adding to your bias or trying to fight it. And it's been pretty neutral for the most part. I think things have actually added to my bias for the most part. Um,
Whoa! Can Isaac say how he's doing first?
yeah, my bad. I'm long-winded, man.
He
So
loves
go
to
ahead,
take
go
those
ahead. My
intros.
bad.
Yeah, I'll keep it brief then. Yeah, I'm doing good. Wait, hold on. It sounds like I'm
I
hearing
thought
myself.
you was about to stop.
Yeah, that's it. And I'm fine. All right, moving on.
Sweet, man. So I'm gonna start off with let me take one headphone out. I'm gonna start off with just going through some charts here. So I'm gonna share my screen, and feel free to like chime in at any point if you guys like got any questions, comments, concerns. So I'm just go through these real quick. The central bank balance sheet is still in a downtrend, which is good. They're offloading assets, junk bonds, whatever. M2 money supplies looks like it's trending downwards. There's a bit of an uptick right now, but overall the trend is down. Hopefully it'll stay there. Gold pretty consolidating. S&P is dropping down. Let me turn this down a little bit more. Got the S&P dropping down. Probably go back up again. Who knows? All these major indexes, the charts are pretty much looking the same. And then we got Apple still retesting previous all-time highs. It seems like Apple just gonna be up forever, but probably not. But shit, you never know at this rate. And then if we go over to Bitcoin, normally I have my 200 day on here as well, but for some reason it's not showing up today. But it's treating the 200 day and the that is my 200 day. So it's treating the 200 day as resistance, which is a big like bear sign. So I think at the very least we're probably gonna at least come back down and test 20K again before we head back up. Only time will tell. And then same thing with ETH. It's already hitting the bottom of this channel. So this is a great purchase and or a great price for ETH right now. I know I'm talking a little choppy right now. It's just because I'm hearing an echo in my headphones. So bear with me, guys. And ETH BTC ratio pretty consolidating. Ever since EIP 1559 and the move to ETH 2.0, ETH and BTC has pretty much been like neck and neck, as you can see here on this chart, besides this little drop here. And then we have Radix. As you guys know, I've been talking about this for a while. They are turning on their blockchain on Wednesday. So we'll see what happens with that. And then if we go and look at USDC, and this I bring up this chart because it's a big indicator on like liquidity coming into the space. As you can see here, hold on, let me hide this here. Okay, as you can see here, the higher the market cap is for USDC, the higher the market cap is for crypto, because people, especially institutions or funds, they will have USDC just sitting on the sidelines as they're waiting to deploy into crypto. Basically, the more this goes down, it shows that hey, people aren't buying stablecoins. If people aren't buying stablecoins, they're not deploying it into the market. So that is my.
Yeah, so keep
Oh, you want to put it back up?
if you want to keep that chart up, yeah. So I was gonna ask you guys, how much do you think crypto is basically on the downturn right now? How much do you think that has to do with fixed income and the fact that you can get 5.5% risk free? Um, and so, do you think that there's a correlation in that the capital that's going into the bond market, for example, whether it's corporate bonds or treasury bonds from the U.S. How much do you think that has to do with liquidity being pulled out of crypto right now?
I think it has a lot to do with it. It's like if and I pulled this up when you said that. So this is DeFi Llama. It basically shows the total value locked in DeFi. So this was like before FTX and Terra Luna. We saw this huge drop off because even though the problem was with centralized exchanges, people pull out of DeFi, right? And DeFi is where you go to get like a yield, kind of like you do in the centralized finance space. Instead of buying a bond, you can stake, et cetera, et cetera. So we can see there's a lot of money out of DeFi, and it's kind of been trending downward since about April. So yeah, I think it has a lot to do with that, like versus risking some protocol getting hacked. Even though there are blue chip protocols, it kind of gets lumped up into one category. Risking something getting hacked or something going wrong, people would much rather get a yield from a bond that's trusted, that's not going to get hacked, and things like that. So I think it has a lot to do with things. Yeah, the yields are higher here, but the risk is also higher too.
Way
And with
higher,
all the
yeah.
hacks that's been happening, people's
Yeah.
appetite for risk is kind of, been dying off a little bit.
Yeah, for sure. I also think it has a ton to do with that. That's why I asked. That on top of obviously there's less leverage in the system. Obviously, because capital is just tighter, it's more expensive. So you're going to have less leverage as well. And so that's why we've been seeing the crypto market as a whole kind of suppressed because a lot of those bull runs, what happens is, and I don't know the exact numbers on this, but a huge percentage of it is bought on leverage. So when leverage dies down, obviously, prices are going to chop to the side for a good while. And yeah, man, the yield curve is still inverted too. I don't know if you can pull up a chart of the
Yeah,
yield
yeah.
curve. Yeah, and I'll just say this as you're pulling it up. So yeah, when you're talking about like smart money or whatnot, um, if someone, let me put it like this for the people watching, if you're able to generate a 5% yield by holding a bond for 1 month, so you're talking about 1 month paper, right? um, if you're able to generate a 5% yield and there's no risk, and you have the opportunity to also generate 18% conservatively APY uh, on a some type of yield farming whatnot.
And
Now,
one thing, actually, JT, that's a great point.
go
I
ahead,
just want
go.
to say this one thing and let you finish. Another reason why it's way less risky is because like getting a yield on a treasury bond is like taking a USDC and staking it, and you're
Yeah,
not exposed to any impermanent loss risk. You're not gonna get even. It's harder to get a 5% yield or a high yield on just stable coins alone in DeFi. Most of the high yields that you're getting is on assets where there's risk involved.
100%, 100%. And now that's just a choice you make, right? So if you have a good understanding of that project or how that particular system works in which you have your capital staked in or whatnot, go ahead and take that risk. But we're talking about a lot of TradFi money here. And if you got traditional guys with millions of dollars, 5.5% for holding something for a month is extremely fantastic, by the way.
Yeah.
Um, so, you can bet that they would take that every time. But now that comes into question, if, things start being piled into the short end of the curve, will that push yields back down? And then what would that mean for, you know, the longer term bond market, and as well as what will it mean for crypto? At that point, do you start to see a reversal and you start to see more allocation towards crypto? Or do you see more piling into the long end of the curve
What was the
as
original
yields
question again
fall?
at the beginning? My bad. I kind of lost
So
track.
yeah, no, it's kind of like one of those things where, because I don't know the answer really, I really don't. So what happens um, once you start seeing more people pile into the short end of the curve? So they're piling into T bills, right? And they're
Hmm.
generating 5.5%. But then as demand goes up, the price of that bond goes up, and then the yield goes down. And so, do they start piling into the long end of the curve after that, going out? Or do we see a reversal back into crypto? And it's not that cut and dry, of course, but yeah, I just wonder, what's going to happen. And that's one thing I've been looking at quite a bit. It's like, how long can these short term yields stay elevated? I really don't know. So,
Mm. That's a good observation slash question. I feel like the crypto market and the stock market are super correlated, but I don't think the bond market and the DeFi market is as correlated as the crypto market is with the stock market, if that makes sense.
Yeah, it's a weird thing because I always think a product like that when you're talking about high risk liquidity, and I've been saying this is kind of like the best barometer. So if you think liquidity is going to contract in the short term, well, and so far it's played out this way. I know DeFi volumes are going to contract as well if overall liquidity contracts because it's if I have more money, I'm okay taking more risk. It's just simple as that.
Yeah.
So
Isaac, you got any thoughts on that?
I mean, I would presume that as the market becomes more risk friendly and people have more liquidity, you're going to see a certain amount of that put into crypto.
we so that's assuming we still don't have like liquidity is still not increasing. It's just that yields are
Mhm.
going down because demand for those short-term bonds or short-term bills have gone up because people are piling into them. And so even in a contracting liquidity environment, when you have short-term bonds going down, so now that risk-free rate isn't as attractive anymore, what happens? And I guess that's what I'm wondering. Like, what happens? Do they still pile in at 4%? Do they still pile in at 3.5%? Will it ever get back down at 3.5%?
Yeah.
So
I mean, I presume it's all on a curve. Like, if it becomes less attractive, less people pile in, and then they'll just go into other things. Maybe one of them is crypto.
yeah, yeah, the bond market is like uh, one of the more complex when we're talking about macro, and that's the
Yeah.
one I'm constantly trying to understand more, just to keep it simple.
Do we know how the crypto market correlates with the bond market?
I guess long term, not really. Um,
Okay.
or
Well,
I'm
yeah.
saying for me personally,
Okay.
but just it's to me it's like equities, right? So it's been performing just like equities. So to me, it should be inversely correlated. But as of the past year, I don't know, man. Crypto market has been really, really choppy, really up and down. But even like a small range, but it's that range is still relatively large. So I'm not sure. It's like the bond market has been moving in one direction for the most part.
Yeah.
Equities have as well until very recently in the past, couple of days or whatnot, couple of weeks.
Yeah.
And crypto has been kind of it hasn't seen the gains that equities have seen, but it also have. They just came at like a different time, right? Because in crypto in Bitcoin, you see huge spikes and then it consolidates, and you think it's doing poorly, but it's still 80 up 75% for the year or whatnot, right? So I'm not sure. It's a good question. I'm gonna have to do some more research on that.
Yeah. Ditto.
Yeah.
Man, what's your thoughts on this? So, in regards to interest rates, like I seen a chart online that puts it puts all of the interest rate hikes, all the interest rate drops, and all the times where they were just like flat on a chart, color coded, and what the S&P did. And it's actually like when the Fed is printing money, markets were dropping because it's like people are looking at it like, oh, the Fed only prints money when there's a panic, so shit must be effed up, so we're gonna drop. But when they're actually raising rates is when the bull markets were happening. So it's kind of just like, man, it's like the opposite of what everyone is saying. What's your guys'
Yeah.
thoughts on that?
So it's interest rates are it's interesting because yes, and throughout history, you've actually seen downturns on rate cuts because of the narrative surrounding those rate cuts. But as a correlate to assets, that on the flip side increases liquidity because it makes the cost of capital a lot cheaper. And so
It
obviously
increases
that
liquidity
allows
when the rates
more.
are raising or dropping.
What you say?
It increases liquidity when the rates are being
Dropping.
okay.
Dropping. So as capital is becoming cheaper, and so now people are obviously willing to borrow a little more, even though the macro narrative may be on the negative side. And so obviously during those times, it's more appropriate to use leverage because if you're borrowing at a lower interest rate, for example, 1%, and I could generate 4% or even 3%. Shit, in a lot of cases, 2%. That still is worth it for me to invest in this asset using my leverage. And so, from a liquidity standpoint, yes, it could help like certain risk assets like Bitcoin. But yeah, on the flip side, the stock market does do poorly because usually the Fed is cutting rates. Like they're not cutting rates in good times. Like that just doesn't happen. So things that are bad are happening, and that's what forces them to cut rates. And that's why people are projecting, rate cuts out in like Q2 of 2024. I don't know about that, but they believe we're going to get, something near a recession that time, and it'll force the Fed's hand to bring rates back down, which I think will be a mistake. So I could see that as a potential catalyst from a liquidity standpoint, for sure. But overall, like equities, not really. And I think we're going to see that again, what you just said there. And yeah, the ETF and the halving is not going to have as much of an effect as it used to either. I think the biggest catalyst is definitely going to be an ETF, the ETF, not an ETF, BlackRock's ETF specifically. I think once that happens, that brings capital in that we didn't even know exist.
It's true. Do you guys feel any? I mean, we all.
Also, just to hammer home that if you want to pull up the trueflation chart as well, or the trueflation number, it's sitting at 2.51%.
You want me to pull it
Uh,
up still?
yeah, yeah, you can pull it up just so people see it on the video.
Okay, I got you. I'm like, well, I mean, you kind of said it.
No, it's just cool to have the visual.
I'm just yanking your chain.
Yeah.
Here, let me.
So fucking what was I saying? Oh, trueflation is at 2.51%. Now, here's what I was thinking about earlier. So you guys know what I like about trueflation for one is that it's on the blockchain, right? Like you can go read their methodology if you want to download it and read it yourself. I actually went through it and
And how is
you
this
know,
different from CPI? Did you want to talk about
so
that?
it's real time. It's on the blockchain and they use more data points.
It's on the
So
blockchain.
the US CPI we use like 80,000 data points. They apparently use like 10 million.
Yeah. What
And
do they
it's
use
real
my?
time and
What do
it's
they
on the
use my
blockchain.
Rite Aid? They use my
So
Rite Aid purchases or something?
real quick, bro. So it's on the blockchain, and this is where I kind of went back to, the CBDC. I think it's more of like a data thing where they'll be able to make decisions at a much faster rate by having data like this. It's real time. So anyway, it had me thinking that if inflation is actually at 2.5% right now, well, they do, or the Fed is in a position where they have a high risk of overshooting. And they probably already overshot if inflation is actually 2.5%. And so, what if we actually get down to core or headline inflation at that 2% goal way faster than they've anticipated, which would mean that the effects from the rate hikes, it would have more room to kind of filter through, and we would actually see more downside, which would cause them to cut rates at some point in 2024. And so I was kind of thinking about that on the flip side, like, damn, will we actually enter a Fed induced inflation? And if it does happen, it won't look like that if you're only looking at the headline CPI numbers that the Fed and the US and the BLS goes off of. But if you're looking at this trueflation gauge and it's actually accurate, which I think it is, you got some very credible people who advocate for this. So I guess we're going to see. But yeah, if it does play out that way, well, then yeah, they're definitely going to overshoot. We're going to have a Fed induced recession, and they're going to have to reduce rates quicker than they've anticipated, which we might get exactly what DeFi Trader was talking about as a catalyst in terms of liquidity for Bitcoin and other risk on assets.
So, good observation. Two quick questions for, I guess, anyone. First question is, the Federal Reserve's goal is to get to 2% inflation. I forget what the CPI was. One of you guys can remind me what the last CPI print was, but it says,
Headline was like 3.7, core was like 4.3.
and Trueflation is saying 2.5,
Yeah.
right? So the first question is, what do we think is going to happen when Trueflation or CPI hits 2.5? And then given that we all speculated that they were going to pause this month and they did, what do we think is going to happen next month, and does anything change?
I would wonder where trueflation comes in at if headline CPI gets down to 2.5, because this has historically been lower than what the headline number is. And so when we were at 9% on the headline CPI, for example, I think what 7% on core is
You
something
think that
crazy.
Trueflation be higher than CPI?
You would think so, and it probably, if this had existed during COVID, it would probably have been higher than what the CPI was showing, right? And so now, bro, they've hiked rates. This is the most rapid rate hike cycle in history, right? And so
True.
there are going to be a lot of things that are not like consumer staples or consumer like necessities. They're going to be much more volatile. They're going to be affected a lot more by Federal Reserve's monetary policy. So I'd be interested to see where truflation is if we get 2.5 on the headline CPI from the BLS. And shit, what if it's at zero? What if it's at a negative number?
Is it BIS or BLS?
BLS,
What's BLS?
Bureau of Labor Statistics.
Man, I was thinking the Bank of International Settlements. Never mind.
Uh,
Obviously. Okay.
yeah. So I don't know. That's interesting. What do you guys think on that?
Isaac, what's your thoughts, man?
I mean, I expect the pause to probably continue.
Think they're gonna pause again next month?
Maybe. I don't know. I'm curious what the betting markets say.
Higher for longer.
Higher for longer.
Yeah, if you want to
Um,
pull up the dot plot while he's talking, Vince, this basically is a projection of where Fed official thinks interest rates are going to be, and each dot is a person. Just to explain that for folks at home. Yeah, so if anything, if it's not a just standing still, inflation might tick back up enough, and the labor market might remain strong enough to where the Federal Reserve feels the need to hike another 25 basis points. That's why they're leaving optionality open. And that's even part of the consensus that you see higher for longer. Most of those dots were where we are now and above where we are now. And so that's going out to at the end of 2024. And so pretty much like three people on that chart. Let me see here. In 2024, you got basically some folks advocate saying we're going to cut rates. It's almost half and half. 1, 2, 3, 4, 5, 6, 7, 8, 9. So you got 9 saying we're going to cut rates, 10 saying we're going to keep rates elevated. And so still for the most part, the consensus technically, even though it's pretty evenly split, is that we're going to stay higher for longer. But even the split between the two camps, it shows you like, who knows? And I always want to stress that who knows? No one actually knows. We're just going by the data that we see, right? But anyway, I do think they're going to, if they don't pause, you're going to see a rate hike. I feel like some people still try to advocate for or try to argue that there's going to be rate cuts like even this year. It's just so weird sometimes when I hear people talk like that. It's like, what are you seeing? Um, but anyway, yeah, they're going to keep things how they are. And I think that the consumer is actually going to have more troubles coming here very soon. So you got like a lot of things kind of weighing down right now. So you got uh, tightening credit across the board, contracting liquidity, and that's because of higher rates. Stimulus has been halted from a lot of angles. Student loan repayments, they start October 1st, and that's like 30 to 40 million Americans who are going to resume payments. So that's eating away at like household budgets. You're going to have higher energy prices. I think it's pretty certain now that we're about to enter a bull market in energy. So we're going to see higher prices in that regard, and that's going to translate to higher gas prices. You got the UAW strike. Who knows how that's going to end? I can tell you how the one ended in 2008 because I was out there with my daddy, and all of those guys who were out there got fucking fired. And I just didn't see the benefit that time. And I still don't see the benefit now because the ones who are going to benefit are the ones who don't get laid off. And most of those folks will get laid off, unfortunately. And maybe hopefully I'm wrong on that, but I'm just going off of experience back in the day when we were literally going to Hamtramck, sitting outside with the signs like, man, this is so crazy, and everyone lost their jobs. And it happened slowly, but it happened surely. And I can illustrate that. My dad's hourly pay went from like 33 to 18, and I remember this because I'm like, whoa, that's kind of a big drop. I was in the ninth grade, bro, so
That's
I'll
pretty
never
much
forget it.
half.
Yeah, and then it went down to $9. And then like 2 months later, he got laid off. And I was like, fuck, I kind of saw that coming. And I'm only in the ninth grade. Like, why wouldn't you prepare? Like, I was just upset. And I didn't know what the hell was going on. But anyway, so I wonder what's going to happen with the strike. And then you have the potential government shutdown. Even though that's usually not a huge deal, but people always like try to make it a huge deal. And Yeah, it's just weird.
You want to talk about what that is a little bit?
What, the government shutdown?
Yeah.
I don't know like the exact details of it, but we're at risk of a government shutdown because you know, like the two parties just can't agree on like spending differences and shit like that.
So when you say government shutdown, does that mean like the government's
They come to a halt. There's nothing else to be done because they need to come to a decision on that particular thing. So remember the last one was over the debt ceiling. And they had to eventually, of course, they raised the debt ceiling, but the stalling was like getting favorable terms within that for whoever,
mm,
So
crazy
so
times,
yeah.
man? You guys,
Yeah.
I know you kind of said this at the beginning, but I think this was before we start recording. No, it was after. You
Okay.
guys making any changes to your portfolio with this information? I know you said you're expecting a bull market in energy. What opportunities are you looking at, if any?
None in energy that I'm particularly looking at.
Okay.
Yeah.
Isaac, you
Yeah.
making any changes? You see any opportunities arising?
No, just maximizing the boring, low yield but safe positions for myself, and then just
Nice.
staying in crypto.
Just DCA in a little bit here, a little bit there.
Yeah, I threw a little bit of money in like a month ago because I saw things kind of choppy, and I don't know. We'll see. We'll see what happens.
Okay. Are you guys just buying Bitcoin and ETH? JT, I know you doing your DCA and the chain link. Isaac,
Yeah.
what potential or what projects are you looking at in crypto? Just BTC and ETH, or are you looking at anything in particular?
I'm
Crypto,
just
I pull. Oh,
all
I thought. My
Bitcoin.
bad. My bad. Go ahead.
No,
I
it's
thought.
all right. I'm just all Bitcoin. Oh, also the government shutdown is it's over a spending bill. So it's mostly has to do with whether we're going to be funding the government continuing forward or not. So they're just arguing over appropriation of spending.
Yeah, I can. Look. I bet you the Democrats are the ones who want to spend more right now, and we
Well, yeah,
want
I
to
mean,
spend less.
almost certainly. Well, it's the
Yeah, that's
Republicans that
always how
want
it
to
goes.
cut things.
We
You
need
know.
to. We need
Man,
to.
this doesn't feel like an election year, does it to y'all?
Not really.
No.
Now, to be honest.
Is
Yeah.
Donald
Well, it's
Trump
kind of a
running
rehash,
again? Like I
though.
know he
I feel
went
Yeah,
like
he
the
and
is.
got
candidates
indicted and
are.
all that stuff. Like, is
I,
Donald Trump actually running?
Yeah, of course he
I
is.
feel like the candidates suck this year.
They always suck.
No, but like this one, they
It's no
particularly
hype
suck.
behind it though.
No
It
hype
usually
at
be a
all.
little hype behind the
Well, it's
election.
because it's the same guy again, and it's the same people. It's gonna be Trump versus Biden. They're
Yeah, but
both,
look at
done the
when
same
Gold State and
thing.
Cleveland was hitting the finals every year. People were still hyped.
Look. Trump,
Yeah,
it's not hype because Trump is going through his legal stuff and they're like suppressing him. He can't go out and do all these things because isn't he in jail right now?
That's what I'm
nah,
saying. Like,
he's not
Oh,
in
he's not.
jail, but I mean, he's going to courts and stuff. He's
Yeah,
being
so he's dealing with
indicted.
that.
So
So he can't do his normal thing. And obviously, I feel like there's
man,
some
he's probably
purpose
stressing
to
out
that.
right now.
But when he's
yeah,
free again, bro, there's definitely going to be some hype around it.
I
Once
heard
he
that
goes on this tour. Huh?
he was supposed to do like some kind of debate or something, but he did like this interview with Tucker
yeah,
Carlson, and then he released the interview like right before the debate, and he got like more than quadruple the numbers that the debate normally gets on just his Tucker Carlson video. I don't know why I can't say his name.
yeah.
His Tucker
Tucker
Carlson
Carlson.
video.
Yeah, it's a very uppity name. I like the guy, but it's a little bit, a little bit up there.
Yeah, no, I agree 100% on that.
But yeah, no, I mean, it's gonna be Trump. I don't know. I don't really know how it's gonna affect. Yeah, it's probably gonna do the same thing it always does to markets. Democrats have an incentive to keep the market going well. They run government right now, so there's like a lot of incentive to do that. Because historically, the person who loses the election, if you're an incumbent, you lose the election when the economy's not good. It doesn't even matter if it was your policies, it doesn't matter if it was the guy who came before you, whatever. Even if there's a fun study, if a hurricane hits an area, the person who is in the area, like the representative, is highly unlikely to win their next election. No matter what they do to alleviate the harms of the hurricane, highly unlikely to win. It's just because people blame whoever's in
Your
charge, no
brain got
matter
to
what
find something
Yeah,
happens.
to
you know
blame.
what's funny,
Yeah.
bro? There is not one rescue effort or like cleanup effort that has gotten like more praise than negativity around it. Even Going all the
Oprah
way
and The
back to
Rock.
Hurricane Katrina, the way that it was handled, that's where most of the complaints were centered around. So that's an interesting stat actually, and it's almost like because of the hurricane, everyone's affected, and as a human, they go towards that natural tendency to find someone to
Hmm.
blame, and the easiest one is whoever's running your city or
Yep.
municipality or whatever. So that's interesting.
Yeah. And same true with the economy, just at a national level. The president is unlikely to win if the economy is doing poorly when they're running for reelection.
Yeah, I feel like Joe Biden would just be unlikely to win
I
again.
don't know. I mean, they're both pretty unlikable to certain segments of the population.
That's
Like
true.
Trump's really, really unlikable to a certain segment of the population that's like left wing.
Yeah,
But Biden's just generally unlikable to kind of everyone, I think. You know what I
yeah,
Especially
mean?
at
except for
this
the
point.
people we don't see apparently.
Yeah.
Yeah.
I know. I've
Especially at
never
this
really
point.
met a strong Biden person. I don't know. I hear they're out there though.
That's true, man.
Yeah, they're out there somewhere, just hiding away, probably falling. Like I'll support,
Yeah.
just in the ground.
Yeah,
Fuck it,
unsuccessfully trying to get up escalators. Yeah.
Jesus, man,
It's
bro.
rough.
I was watching a Joe Rogan clip. He had Kurt Angle on there, right? Um,
Hmm.
and he was talking about Vince McMahon. So it turns out Vince McMahon is 2 years younger than Joe Biden. Think about that,
No.
bro. My
He
man's is
just,
still
bro,
squatting.
he's roided the fuck up though.
It doesn't
That
matter.
helps.
It
Yeah.
It
doesn't.
does. It
No,
does.
it does, but bro, even if he wasn't, he would be
You're
in
right.
much better shape than fucking Joe
Yeah.
Biden. And
Well,
like much better
JFK
to the point where
Jr.
you start
is
questioning Joe
72,
Biden,
right?
like, how are you on the decline so fast? If this guy's like that.
Yeah. I mean, TRT is like a big part of it too. Because I know that JFK
What's TRT?
Jr., testosterone replacement therapy,
Oh,
it's when
yeah.
you're over like 30, some doctors might recommend that you get on TRT to replace your naturally declining testosterone. I know that
Wait, so
JFK
you mean to
Jr. is
tell
on
me I'm
it.
becoming more of a bitch? No, I'm just
Oh.
Damn.
ooh.
Wow, bro, you're something for that one.
Oh,
Crazy
I thought
times,
you were
man.
gonna finish. You just stopped.
My bad,
Me?
Isaac. You can finish
No,
it.
that
Yeah,
that was that was a good way. We're getting silly there, so you know that's a good way to end it out.
yeah. I know it's
But
getting
yeah,
late for
man.
you over there, Isaac.
I know I'm
Any
sorry I'm
final
not like
thoughts?
fully on it, I guess, today, but I'm just I'm a little bit tired, and I think honestly JT's saying like a lot of things that I'm already kind of thinking, and it's a lot more eloquent than I think I would have put it. So I'm just like, yeah, just let him kind of give the basic takes.
I appreciate that. Sometimes I feel like explain things. I feel like I explain things like shit. So
No, I
Right as
thought
you're
it was
saying,
thought
sometimes
it was good.
explain things.
yeah,
Yeah. Sometimes I explain things not good, and
yeah. I do want to make a very bold prediction that kind of goes against consensus right now, and I've been saying this that this is where I would like to end it off. Housing, single family specifically, it won't crash, guys. Prices are going to keep going up, whether it's slow or fast. They're gonna keep rising as they are. The only thing that can fix it is inventory, and not just the kind that people are already living in, like the existing inventory. It's going to have to be inventory that is owned by shadow companies and banks as well. And there is no incentive for them to offload them off their books right now, except for the Federal Reserve. Even they're offloading the mortgage-backed securities at a slower pace because it's going to put more upward pressure on mortgage rates. And so we might see a market where housing slows down to the point where uh, new builds are just going to have to catch up, or unless we see an uptick in demand to the point where you got 100 people for every house you have, like on that type of scale. Other than that, the only solution to what we have now is inventory, and we can get there by if the Federal Reserve happened to lower rates all the way back to the zero bound, or if banks and institutions they offloaded that 30% of the housing market that they own, they offloaded damn near at one time. That's the only reason you're going to get like a huge decline or a rapid decline in the housing market. Other than that, Airbnb doesn't matter. and all the shit that people are trying to make matter, it doesn't matter. It's supply and demand in this game, in the cost of capital. Right now, the cost of capital is high with low supply and not so high demand. And so prices will continue to rise. And that could also be the reason inflation remains elevated as well. And even if we were to get a decline and we start to see rate cuts, it's not going back to the zero bound, because if we do, we will end up right where we are today again at some point in the future. And since we know what happens now, it won't happen. And so, yeah, we're going to try to get unemployment up without housing crashing. I mean, without crashing housing. And yeah, it's just going to be unaffordable for the time being. You know, I truly believe that affordable housing quality is a thing of the past,
Oh, great.
unfortunately.
That
We'll
sucks.
see, man.
Yeah, it does.
We'll see.
Damn.
does.
Maybe some 3D printing company will come up and just overload the supply.
I will
Uh,
not live in the pod.
Yeah, they're already doing that in like certain markets, and it just still can't build them fast enough. We're short like 5.5 million units.
What about tiny homes?
Tiny homes. So I was actually involved in a project. I'm not going to say the name. It was out of Vegas, but my sons are funny. It was out of Vegas, but anyway, the plan was to provide tiny homes, not to accommodate for the overall supply because it would make a fucking dent, but to supply homes for homeless people, whether it's free or extremely inexpensive. Um, and so yeah,
Free?
that,
So the government in this project was like the municipality going to pay for?
exactly. So yeah, we were
You was
talking
on
with
your Fred Trump shit, huh?
Yeah, we were talking with the mayor of Vegas, which was pretty cool. Just to think you're the mayor of Vegas, huh? But
I didn't
anyway,
think they had a mayor.
yeah, and he cares about the homeless problem. That's been a huge thing over there, obviously. So tiny homes. I guess I can say the name, the Destiny Project. So you guys can go look it up if you want. It's named after a good friend's daughter. So the Destiny Project, and it's tiny home communities for like homeless folks. So I know they've been getting some traction over the past year finally. So yeah, we shall see how that turns out. But I don't think tiny homes will fix the supply problem. It'd just help with the homeless problem, which you guys probably need up there. Turn all those fucking the tent broadways into tiny house broadways, maybe, you know?
Tiny house
They need
Broadways? I still can't walk on
something.
it.
What you mean?
If we turned the streets into a bunch of tiny homes?
Oh, I mean, it'd still probably be dangerous. But it's like, I don't know,
Totally.
when you have like, it's something about, okay, so I've been homeless before too. When you're
Mhm.
homeless, you kind of just don't give a fuck about things that people give a fuck about because you got so much shit you got to worry about, right? It's like you got the basics you need to get figured out. And so it's something about having a shower, maybe a couch, a nice bed, a front door, a window, a floor you can take your shoes off and walk comfortable. It's something about that your brain starts operating a bit different and you literally don't think about the basics anymore because you already have them. And now you're focused on whatever it may be. And so a lot of people, so when I was homeless, for example, I don't know what, I gravitated towards people who like read books and they had some intellect on them, right? And they were smart people, but they just couldn't get past the basics. They didn't know how to get it. Because when you don't have shit, it's hard to get shit. I was a bit different. I was working from the phone. You feel me? Like, yeah, fuck around, made $20,000 in the forest, boy. but anyway, yeah, it's yeah, I forgot where we brought up homelessness, but
Yeah. I mean,
The
that kind of
housing
reminds
market's gonna
me.
keep going up. That's why you
Oh,
brought it
yeah.
up.
yeah,
Yeah.
yeah, it's gonna lead to more homeless people. So we need a solution for that,
That's true.
which could be tiny homes.
Yeah. Perhaps not a solution for the whole housing market, I hear.
No, not at all, not at all. Um, the only solution. I mean, I'm waiting on somebody to just be like, "You're wrong," and here's why. And I'm like, "Damn, that's a great point." But the only solution is supply. I heard somebody arguing for demand, but it's like, man, that's a weird argument because even if supply went up, you could still argue that demand went up, but demand probably went up because supply went up, and so it's just weird. So yeah, the only thing that can fix it is supply. Somebody argue with me.
Okay.
So yeah,
Fair enough.
I guess that's it for the day, I guess, guys.
Yeah.
Yep. In closing, Grow It Owls are live. Go and grab one. The first one's free. After that, it's $1.11. It gets you access to a part of our Owl Academy course. It'll get you whitelist access to Mint, their older siblings, and the Know It Owls, which will give you access to all of our coaches, including JT and Sir Isaac Newton here, and a bunch of other benefits.
Isaac. I
Yep.
like it.
So we'll end it with that. I thank you guys for tuning in, everyone who listened. If you can retweet the space, comment, let us know what you want us to cover next week. Other than that, peace and love.
Appreciate you guys. See you soon.